Good morning. Hey, good morning. Today is May 3rd. Whoa. Today is, what is today? Today is Thursday, May 3rd, May the 1st, and I'm Grady on the charts. I wanted to go ahead and get the charts, get started with the stream before the market opened. Good morning. I had been trying to start the stream immediately at the opening of the day, but then I found that I didn't have enough time to kind of explain what I was looking at on the charts, and it made me, made us kind of rush into the day without giving ourselves enough time to take advantage of, to take advantage of an opportunity to kind of just settle in, right? So, hope you guys are having a good morning. I hope you had a good night, and I hope you had a chance to look at the charts for yourself to come up with your own analysis and your own bias before you begin trading for today. I'm feeling a little bit better. I have been down just a little bit. I've had an allergy reaction with the changing of the season, so it kind of it throws me off a little bit, right? Because I have that sinus pressure right in the middle of my face, and so while I'm staring at a chart or whatever, it's almost as if I feel like a barrier between me and the chart. Um, so yeah, I am feeling a little bit better. Kind of in good spirits this morning. Getting a decent headspace. Last night I was on the charts till kind of late. So I slept pretty good. I had been kind of napping, trying to get myself together, but I'm a little bit better right now. So, um, was reading a book last night about the CEO operating systems. I don't know if you've ever heard of this book. It's a very good one. It's on Audible. Pick it up if you would like to um, listen to it. Right, it's very good. But one of the last chapters was about um, being mindful and being mentally in a right headspace. And one of the things that it said is to focus on what you want and not what you don't want. Right. So that fear is when you focus on the echoes of the past, and um, when we use our imagination, that's when we're really dreaming about the positive and good outcomes of the future, So it's just that plays into trading in such a real way that it's so funny. It's just, you know, if you're focused on a particular outcome on the chart, are you really even analyzing the chart? Are you really reading the chart? Right? So today, as we look at the chart, let's take a look at what we have here in the news. We have let's see, what do we have here in the news? We have, when did I adjust this? I do not remember changing this, but that's cool. Maybe I did something different. Maybe I should have done that. There we go. All right, so let's take a look and see what we have here in the news today. There's a lot of stuff going on. That says April 30th. Today is Thursday, May the 1st, 2025, 10 a.m. We have ISM PMI manufacturing numbers coming out. So that's a good thing to look for. That's going to happen about 30 minutes after market open. So we're going to keep our eyes open for that to begin to develop, right? So we should see price action fluctuate the way it does before non-farm payroll, right? And unemployment rate numbers coming out tomorrow. So if you guys follow ICT, you all know that ICT has strongly suggested multiple times that if you're trading, that you should be done trading by Wednesday, 11 a.m. And you guys should, pretty much just read price action and set this one out, right? And set this out. So, um, if you've been watching me or if you've watched any of these other videos, and I'm sure nobody has because I'm looking at the numbers, ha ha ha, like and subscribe. Um, then you see that, I'm not a type of trader who does well in the regular markets, right? We've been struggling lately. And that's another thing that we looked at yesterday. I went back through a lot of the numbers that we've had. I went back through my notes. Went back through my strategy. I looked at the things that were working, and I noticed how I left some of those things, and I started doing something else. And that's one of the things that we should all be careful of as traders. I don't know if this happens with traders who've been trading for a long time, But for newer traders, it's a thing where, if you have success, for some reason, that can cause you to have the type of confidence or a type of an overconfidence in your ability to find your way into price. And when I looked at my success rate and my success rate and accuracy did not tell me that the more I trade, the better I do. My success rate and accuracy was saying to me, "Hey, you look, out of 10 trades, you're going to be um you're going to get stopped out with a loss on 7 of those 10 trades. Two of those 10 trades, you're going to kill the trade with a very small win. And on one of those trades, you're going to be on the right side of the market and then it's going to run to the target. All right. And that's what my number said. So that really does make me question trading less. If that makes any sense, right? At 9:27 a.m., the market opens in about 3 minutes. Really didn't do much analysis this morning. Really did not do much analysis. We took a look at the higher time frame. Let's go ahead, pop this up. This is what we're looking at. I was looking at this daily gap. We jumped up above here on the 4-hour time frame. We have 2 minutes before the market opens. And this is another one of these areas that ICT called out for us in his video review. Check that out from the other day. What I was thinking about today and tomorrow, going into non-farm payroll. My expectations were consolidation or a pullback or a move to a significant area that's going to set us up for the non-farm payroll news. I think the last non-farm payroll was just prior to April 2nd, right? I think non-farm payroll was April 3rd because April 2nd was Liberation Day, when the tariff news came out. So the tariff news and the last non-farm payroll canceled each other out. The tariff news was so volatile that the non-farm payroll news was almost um seemed odd, right? It seemed insignificant compared to the way non-farm payroll normally moves. We have 40 seconds before the market open. So then on the 2-hour chart, I'm just noticing that we've just dropped right back into this level, right back into the London session. There's the consequent encroachment of the London session. We haven't moved down into the discount yet. We've only been in the London session premium. So maybe this premium has become the discount before I move up. I'm not really anticipating anything prior to the news and that reaction to the news that's going to happen at 10 a.m. So I'm reserving any sort of prediction. Um, I noticed that this down close candle, market's just open. Notice here this down close candle stops uh, in the upper half of these two down close candles. So does that suggest that that's an open hold price? Canadian SBC Global? No, not sure. Not thinking about it. Not really making any prediction. Um, I know one thing that I am becoming very aware of for myself is I don't have a bias driven model. I don't have a bias driven model. And honestly, because I'm a little bit market dyslexic, and you would think there's no such thing. I've never heard of market market dyslexia, right? And I'm gonna tell you what market dyslexia is. So most people, as they read market structure, they would say, "Oh, this candle closed here. This candle opens here. this wick dropped down here. It's holding this level. It's gonna go up. That's what most people would say, or I would assume. When I see this, my main thought process is that we had this high, and then we had this high, this low dropped below that low, this high goes up above that, takes it out, and then we collapse. So all the time that these down close candles have been sending price back up like this, we saw yesterday how price never did fall below those levels, right? So market opens and the price just drops right down. So what are we thinking about? Are we thinking about chasing this price? Are we thinking about taking a trade right off the open? Are we thinking about price just plummeting off the open all day long and leaving us behind? Nope. No, we're not. Because honestly, it would not help us to do that. It would not help us to chase this price because it dropped way down here and then pops all the way back up here. This is a 15-minute time frame, 1 hour, 2 hour, 4 hour. So we just saw a price open up and in the opening range volatility, the first thing it does is it drops down here. Why would it drop down all the way down here though? Why would it come all the way down here? Is it targeting this 15-minute, right? Is it targeting this 15-minute down close candle? You see how we kind of gap up and then turn over? Did we just target that? Did we just target the closing price of that? We traded down below most of the closing prices and then we stopped here and then immediately reversed to the upside. And I'm asking most of these questions. I'm phrasing these statements in the forms of questions because when it comes to price manipulation, I fall for manipulations in price. I fall for it. I fall for it. So I'm reactive to it. Hmm. Especially near, especially when we near our when we near our particular time where we're expecting price to do something, when we're expecting price to react and to move. Um, yeah, we I have to give it up to people who trade live on television like every day. I really do have to give it up to you guys. This has been my first month of doing this, right? So I think this is like week 3. And coming into it, I came into it really excited, really wanting to show my ability and my skill off, right? Really wanted to show people that, there's possibilities of money to be made in the market. But I think the most entertaining thing of this entertainment is that people don't understand the true struggle of making money in the market consistently. And I think that when they finally find out what it is, or they attempt to trade, or they trade options, or whatever it is they do, mm, they could have success early on, right? They could have success early on, and it's not even a problem. Early success in the market is a normal occurrence. Somebody YOLOs the option, or somebody takes a trade and they YOLO that trade. You see this imbalance right here? We dropped down here, we touched it, and then we popped up. It's the 15-second chart. This is the 5-minute chart. I don't see any gaps on the 1 minute. Now, if I were to try to attempt to be fast about, just one of those things I find interesting nowadays when I'm trying to be quick on this chart. One of the things about TradingView I don't like is the faster you move on TradingView, they have certain they have certain keystrokes that you cannot make in quick succession on TradingView, or something weird will happen. For instance, you see how I tried to straighten this line by holding shift, right? Then I'll lock it in place. Sometimes when you're moving quickly, you'll hold shift and then this thing happens. But then watch this. It's not here, but it's not here, but it's not here. And then when you come back here to do something else, you have to do several clicks and movements. See, I'm just clicking and it's still active. But you have to do several clicks and movements. That's not what you need to do, right? So you need to exit a trade, or you need to enter a trade, or you need to mark out an area. But you're trying to, you have to clear this other thing out of the way. You have to clear this other thing out of the way before you begin to do what you need to do, because the seconds are ticking by. Your entry is only going to be there for just a split second, right? It's going to be there, 1 or 2 seconds. There's your entry, but you're doing these other things, trying to clean up and trying to move things around. And it wasn't like that maybe 6 months ago. 6 months ago, you could basically just fly through. You could fly through TradingView without these additional steps. Another one is when you create a box. And somebody thought that this was a great idea, so that you can create 15 boxes without selecting the box again. Except what? I have to right click in order to exit this. I have to right click in order to stop that. Then now I would have to go back and clean up all these old boxes. And then, oh, the trade is passed. Hmm. So another thing. Um, this, this. Okay, so if I create, if I put, if I came down here and I said buy limit, why is it in paper trading you can come over here and you can do stop loss and all of this other stuff over here, right? You can pull right here, you do stop loss, you can go click, blah, 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 any other directions or whatever. Why is it that you can't do that? Um, in sort of like in I'm trading a prop firm, but to me, it's a live market, right? Why can't I do that? That's strange. I don't know what it is that's stopping that from happening, but I wish it, I wish that would stop. Right now, price seems a little bit, it seems calm, right? It seems lackadaisical. It seems calm. We're in the discount of London session, and we may see lower prices from this particular point. I was looking um, at the range that was created by the last three London sessions all combined. Oh, we're deep discount on London now. We may be moving away from this area. We might be moving away from this area. I like this. Just ran up and touched that. Where would we be going though? I don't think it matters. I think by the time we get to the ISM number at 10 a.m., we could be 30% of the way down for the day, or we could be making a new low of the day. The London session is the low since midnight, I believe. London session's low is the low since midnight. So since midnight, we have not been below this 1904, 1908 level. Oh, oh, oh. Hey. Mhm. Yeah. Gap here to here. Boom. And I'm just marking it out because I just see the market slowly sliding in a particular direction. And as it slowly slides in a particular direction, then my eyes start saying, "Oh, it's leaving me." Right? What I liked something last night I saw a lower time frame consolidation that went sideways for a while. And I tracked it and I tracked it and I watched it and I measured it and all of this sort of stuff. I graded it, everything. And you saw we hit the consequent encroachment of that first presentation gap to the tick right there. Boom, to the bop. Let's see if we move away from that. This is one of those days where I say to myself, I'm waiting on 10 a.m. and then it gives us the immediate trade off the open. I mean, it just went directly to the center of that gap, stopped, and then turned over immediately. Um, let's see. Do I want that? Is that what I want? Remember, we're going to focus on what we want, not what we don't want. Okay, what are these elements on the screen that I'm need to make myself aware of? Okay, so this top red line is that daily gap that we saw on the 4-hour time frame, just briefly before the market opened. That is the high of that daily gap. The next line is the prior day high. All right, so this next little line right here is the prior day high. Do make that green. Turn the text to something a little bit darker so we can see that prior day highs right there. There's about 18 minutes before the news pops. So, um, yep, about 18 minutes before the news pops. Oh boy. Mm, I wonder how many successful traders there are. I see a lot of people all over social media who make it look like they are successful traders. And I think that's not fair. I think that's not fair to a lot of people who are really struggling with this. Because if you live in your mama's basement and she has a rich ex-husband or whatever, and she buys you all types of gear and stuff that you could decorate your office with, it makes me think that you are you're not that you're lucky, but you just have this type of self-control, and you have this eye, and you have this strategy that makes you extremely profitable. And I feel like that's just crazy. I feel like that's crazy. I feel like, just from my personal experience, it just seems unusual that that would be possible. Now I'm watching this candle as it rise back toward that small imbalance that we tapped in before. I noticed how we created this down close candle with this wick here. We dropped into that wick right here with this candle low, then we turned over, and then we popped right back up. On the lower time frame, like the 15-second time frame, we made a pass up, and then we made another pass down, and we turned around and came back into the fair value gap. We come back into this gap. We touched the consequent encroachment, dropped down to that daily gap. Now we've moved back up, right into the high of this imbalance. That's right here on the 1 minute time frame. We have 17 seconds left, and there was 15 seconds left in the 5 minute candle. Mm. I saw a young guy talking about how his true breakthrough. His true breakthrough in trading came when I can't even remember the rest of the video. And it wasn't, and this is not a knock on anybody or knock on social media personas who, you know, are trying to help people improve. 4 minutes and 41 seconds in the new 5 minute candle. Provided this candle closed just below the consequent approachment of that level, we opened, touched the low of the gap, and then we popped up. Oh, Prior to the news, I don't trust any of the price action prior to news because, as we know, that when a news candle pops off, it normally clears the stop losses above and beyond the current range. All right, it just kind of blows everything out, or it takes out one end of the range, goes to the other end of the range, takes that end out, and then reverses and then heads back the way that it went the first time. So any of this price action right now, if it's not wide ranging or if it's not an extensive move that really changes the while he's yet talking, or changes the overall landscape, then it's nothing that I would really want to want to try to trust. So this close, if we look at this, I'm gonna pop this over to the 15-minute chart. So when we look at the close of this 15-minute chart, you see how this is the consequent encroachment, the mean threshold of London session. When we close below that, now we've turned over here after this long run down to this gap, and then we pop right back up to the lows of this 15-minute up close candle. So just watching that area to see if that means anything, or to see if we just run right through it. It's a very narrow range. Here we go. It's a very narrow range wick. Kind of a lot of overlapping wicks on the 1 minute. We press all the way through that to the close of this up close candle. We tap it and we just kind of pull back slightly. 9:47, 3 minutes to the beginning of the macro. We're dealing with when we look at price. Um, and I know this is all of us. Nobody can just look at the market, scream out, "Oh, bias," and then jump in, and then, well, not everybody can just look at the market and scream bias, jump in, and then take a trade and be correct about whatever that bias is. I don't know why this isn't marked here. Oh, I know, because it's on my other screen. This is London session high. The high of this candle is London session high right there. Now, I will admit, I am extremely tempted to sell that. It's just the way that it touched it exactly. But look how we went through it though. So that excitement that I saw about the precision is another thing that I often fall for. When I mark out a level and that price has come and has touched it, I will often enter a trade on that. Is that a model, right? It's sort of, and I'll tell you where that started. That started when I used to watch price and measure price. I'd watch it, measure it. Watch, I would just gauge price action throughout the day. I would see where price was going. I'm putting up Fibonacci retracements. I'm doing all of this sort of stuff. And one of the things that you notice when you have no intention of trading, that your sense of, oh yeah, this is the spot, is a little more keen. But while I'm trading, I'll see us come to an area like this and we'll tag that with that sort of precision. And then I would think, I want to get in. What One of the things that kind of made me feel like, no, is number one, I told myself I'm waiting on this news that's going to come out in the next 10 minutes. Number one. Number two, I just noticed how we used it here and we used it here and we used it here and we used it here, right? We used this area here, right? Watch, watch. Boom. Because like again, I do not know how it's going to react at this imbalance. I do see this overlap though. And I remember last week, 2 weeks ago, ICT brought our attention to an area just like this where there was a gap and a wick that extended all the way across it. That time he said, that's how I knew the market wasn't done with this. He said, oh yeah, that gap right there. I knew the market was not done with that gap because of the way this wick went across it like this. Right to it, right into it. We utilized it. But does that mean that we're going to utilize it for the short, or does that mean we're going to utilize this for the long? You tell me. Return to this area once again. Hmm. From this low to this high, this is roughly that 87% mark. We still have 10 minutes to see what could happen in any of this, in any instance. Hmm. I just wanted to turn myself down in the mic so I could speak up just a little bit louder. And I think, one of the reasons that I'm mumbling, when I watch the videos back, I am concerned about the quality of the stream. But when I watch the video again, I've said to myself, man, I seem as if my voice isn't projecting, or it's not coming across as clear as I think as I think it should come across. You see how we projected here? Boom, boom, beautiful. That's 9:50 a.m. So this is the beginning of the macro. We hit this level at 9:50 a.m. Well, why are you saying that, Grady? Here is one of the beautiful things about um finding your way into a trade at 10 a.m. 10 a.m. Is that 9:45? Is that 9:50? Is that 10 exactly? Is that 10:10? Is that 10:15? Is that 10:30? Sometimes it is. Sometimes it's 10 a.m. Just this precise element of 10 a.m. We are literally sitting in what you would call um silver bullet, right? The 10 a.m. silver bullet. And I like the 10 a.m. silver bullet because it is very reliable. One of the things that I don't like about the 10 a.m. silver bullet is it's sometimes at the end of a displacement range that began in the pre-market and has been moving since 8:30 and doesn't stop until 10 a.m. And the gap that you're looking for isn't formed precisely at 10 a.m. today. It was formed at 10 a.m. 2 days ago, and then you just return to that gap. And you're like saying, wait a minute. You're telling me I just returned to the first presented fair value gap from last Wednesday, and today is Thursday of the next week? And the market is like, yeah, we just had to clean up that unaccounted for price action. The unaccounted for price action. We just had to clean that up. But yeah, we just did that. Now we're on our way. And so your original bias was long, right? But the drop down was 300 handles to clean that up, and then it's another 1,000 handles in the opposite direction. And so, we want to think, this is funny. That's funny. All right, so what? So what? Looking at the 5 minute candle, and I was looking for price to kind of just remain in this gap, but the low of this up close candle closes in and completely seals off this 1 minute candle. I mean, completely just comes up and closes right there. And as it closes right there, it puts a wick right up above, driving us into this area up here somewhere, that tiny little imbalance right there. And then it turns over and falls back in. 9:54 a.m. 9:54 a.m. Everybody should begin to target. Everybody should begin to create some type of targeting system at this point. Who is everybody? You mean you, Grady? Well, yeah, especially me. Especially me. So, so, what do I like to think? This blue line represents what? And why is it here? Don't know why this blue line is here. Oh, I was measuring this down close candle when we came into it the first time, but we went right past it. Okay. That's fine. We will remove it. 9:55 a.m. Price just dropped right down into this imbalance that we just had established, established for that little small imbalance that we had earlier, right? The start of the day, we had the small imbalance just sitting out here. We were saying to ourselves, oh, look at that. We attempted to grade the range, but this looks extremely bearish on the 5 minute. Just a wick above this high. Then we turned over, we dropped right back into this down close candle. And then there are a couple of gaps down here that we're looking at. Oh, yeah. Because we have these gaps down here that we're looking at, then we see price settle in right here at near consequent encroachment, press the low, It's 9:56 a.m. But at the same time, we're also looking for news. We're also looking to see what the news is going to bring us in the next 4 minutes. Okay. The next 3 minutes and 33 seconds. So, excuse me. With 3 minutes and 3 minutes and 14 seconds left in the 5 minute candle, we drop right into this imbalance. What am I looking for? What am I waiting for? What is the story that we would normally see at this point? That's a great thing. That's a great thing to think about, Grady, right? That's a great thing to think about. But you know what's so odd? What's the odd thing is I can't tell you exactly right now what I think should happen. And, you know, I can't blame old ICT, but geez, I really want to blame ICT. Number one, his example of knowing the narrative is a great thing for everybody to aim at. Now, what he did not give us in his videos is the determination, hard work, and dedication to being precise in understanding exactly what that narrative is. No, he says it over and over. He repeats it over and over and over. Every time we watch this video, oh yeah, it ran up here and it took the highs and it swept the liquidity above this level. It came down. We dropped in, we moved up higher. We came in, took that low out, hit this area, popped up, swept the liquidity out over there, then it been dropped right back down in, right? And even in his newer videos, it's almost as if he's getting tired of saying the same stuff too, because now he's just like, look, I'm gonna give you guys a 2 second video, and then that's gonna be it. Now, there are a lot of people out here making Amazon books based on his strategy. I saw one particular thing that I purchased early on that I thought had some accuracy in association with ICT's trading strategy. And I have to admit, I was taken. It took my money, and I felt bad about it. I didn't think it was written by ICT. I thought it was just somebody who studied it and it was a trading journal, but the trading journal was just any random trading journal for any random trading strategy. And it just had a couple of things, full of order block, it just had the word order block slammed in it throughout. And then um what's the other thing that it had in it? Time is 9:59, 22 seconds. We're gonna hold that story for just a second because we want to see what happens when price pops off right here. 28 seconds, 29 seconds. Normally, I think that we would see a reaction just prior to the news. I don't know how that actually works. I'm sure that the calculations, once the information has been released. Now, and I'm assuming that the news outlets, eh, I'm assuming the news outlets don't get the news but prior to, well, I'm not sure how that would work then, right? Boom. How does the system get the information prior to the news if the news is supposed to be the first? Okay, what do we have here? Boom, we're thrashing. We're thrashing. 48.7. US IM PMI for April, 48.7. We were expecting 47.2, so um 48.7 is the number that we have just received on PMI. Now, I'm expecting to see price thrash for just a second here. Mm-hmm. Okay. Just want to see this a little clearer for a second. What are we looking at? Are we looking at price fly up, hit the low of this up close candle, turn over and dump? Or are we looking at price, drop down, take the liquidity out below this low, and then turn over in order to move up. We are watching price hit this level. We drop down pretty low. 10 a.m. So at 10 a.m., we took out London session low. We're down here in this down close candle. Mm-hmm. Let's see here. Yep. 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 It's pretty steady, huh? 4, 3, 2, 1. Here we are. Let's expect price to drop down. This box was surrounding this down close candle because it was the lowest one in its current range. But I'm going to remove it because we closed below it. And because we closed below it, I would just naturally move us to here. Let's say that was the prior order down bullish order block. Then we would move to here. We drop in very close to the mean threshold. As soon as we get close to that, we immediately reject and move back in the opposite direction. Well, Grady, look at the higher time frame. What are you showing us on the higher time frame? On the 15-minute chart, there's this down close candle right here with this overlapping wick and this overlapping wick. We drop right down in. The body's closed here. The wicks of the candles are down here at the opening price of this candle. Control Z. We just ran right to the low of this. So we have this small gap here. Remember the original order block level there? So that is what I was looking at. That was this gap right here. We opened up, we dropped down, and we hit this opening price of this down close candle. Foolishly, my expectation is that we would reclaim this down close candle and then move up from that level. However, I know that I can't really trust price action today, so I am not willing to just um, take my eye off of this right now. And that was my mistake. That was my mistake. And look, I'm not calling it a mistake like I feel bad about it. I don't feel bad about it because I know that I can't be profitable or not taking trades. It's not even an option. But we just hit the mean threshold of this down close candle one more time. Now I just have to watch and see whether or not it's going to give it to us this time. We drop down, hit the mean threshold, 3, 2, 1. We're down below the opening price of this down close candle. And that was that. Should I try it again though? That's right. Should I try it again? Oh, it's not isn't I don't think it's gonna let me try again. So it was the mean threshold of this down close candle, then the mean threshold of this candle, right? So we tested it here, we went here, then when we came back, we tested it again. So that's how that went. Now we're inside of that small imbalance that we, represented to ourselves possibly as that first presented gap. I don't like how aggressive the price is moving though. And the reason I say I don't like it is because when it moves so quickly, so fast, so quickly, I am less inclined to be able to, you know, take the trade, to be able to get involved with a trade. Turned over, mean threshold, turned over the low. Let's see what we do now. Let's see if we come back in again. Sorry. See if we come back in again. Ooh, 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 ooh. Okay. 302. Okay. Didn't expect that. 10 a.m. and here we are. That's the opening price of that down close candle again. That's interesting. 1 minute and 57 seconds left in the 5 minute candle. I'm gonna zoom out. I'm gonna pull back on this 1 minute chart. Take a look at this again. Down, up, down, up. Sometimes this represents a market structure shift and I can't see it until afterwards. However, we moved back up, came down here below this and closed. So I'm assuming, right? I'm not truly an assumption, but I can see that that's also a shift. Then the thing that I have to be careful of is this element. And this element is the idea of having close proximity gaps, equal distance from each other. But technically, this is one gap, right? If we wanted to tell the truth about it, this would be one gap. And this gap would begin right here. It would begin here because those two aren't quite overlapping. Then I would pull it past here. See this gap here, this gap here? All of this becomes one gap. And this is more what it looks like as far as this gap, right? Do, 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 do. Mm, 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 mm. The higher this level is the daily gap. And I just kind of wanted to move it out of the way. We pressed through it in the PM session yesterday. Then we popped all the way up into this area. All of this, I'm going to remove it immediately. And then I want to reassess what I could possibly be looking at. This gap to here was the first thing I saw. Then I take this and I can pull this too. here. All right, this is kind of what we're looking at. Bam. Here's a high this up close candle. We don't violate it. We just put a wick above it. Then we drop down below this level. We pop up to the middle of this range. Nothing is overlapping through here, possibly except this to here. Take that, pull that forward. We give that a different color. Then we drop down. But we don't drop away violently, right? We don't just plummet. Even at 10, 11 a.m., we just don't really just plummet. Okay. That's crazy. Okay. So this is the 2 minute chart. That's the difference between what I see here and what I see here, which is this is the 1 minute chart. Easy money, y'all. It's easy money. Don't get it messed up. Don't get it messed up. They tell you it's like throwing dice. It has nothing to do with that. Oh boy. But as they say, easy come, easy go. No, none of that stuff is profound. None of that stuff is profound. The truth of the matter is it's really hard work. It's really hard work to um try to trust yourself. Try to trust your judgment or trust your assessment of price. Try to trust that you aren't crazy, right? Try to trust that you haven't lost it when you look at the market in a particular way and you're thinking to yourself, I know that this should do this or that should do that. And then you say to yourself, oh, I don't know. I don't know what it's going to do. The market could just be irrational, right? It could just do something that it's doing. And I am asserting that I want it to do a thing and I'm trying to impose my will. And the market is like, nope, I'm not doing that. So I don't know why you think that I am, but I'm not doing it. You see the small 15-second imbalance right here between here and this wick? Pull that forward. Look where we are. It's right there. This is when I start getting into the weeds, when I start looking at the lower time frames. And the lower time frame gives me small gaps that are part of smaller time frame retracements. Right. So if the 3 minute candle is going to pull back to a particular level, it still creates smaller time frame gaps and stuff. But if the hourly time frame is going to do something, then we would say what? Boom, that we would drop down below a particular level on the hour. We would do a particular thing and then we move a particular way. We did just change over hours. I wonder how well this would serve to move price to the upside. Is this enough? Is this enough to move price to the upside? That's the question that I have right now. Mm, 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 mm. Hmm. 1 minute into the new 14-minute candle. Not really much to say. The only thing I can do is I can just keep calling out gaps and sort and stuff like that. And that, and that's the exhausting part about trading for new traders is that we're very precise in looking for all of these price signals or price indications. I missed this trade right here. This is the low of the hour. So the prior hour close here. Can't use that over here. I got to use this one over here. The prior hour closed here at this red line. We traded down below the low of the prior down close hour inside of the wick of the prior hour, and then we moved back up. So this is like, I missed this trade right here. Back to the opening price of that prior hour as well. So we've just run from its close down to its up to its open. This is where the prior hour opened. Boom, just right above that opening price, but it's a down close. Excuse me, but it's a down close candle. So not really too concerned about that. Sometimes I exhale because 30 thoughts enter my head about just retracing down to the prior down close candle like this. And then I watch it and then I don't do anything about it. And then I kick myself internally, thinking of what could have been, should have been, would have been, and not wanting to take the risk of um, wasting a good trade on a whim like that. So the idea is that we ran above that down close candle. And so I was thinking is right. Like down close candle support price. If you move up above it, sometimes it's just a wiggle right back to that previous down close candle. Then we move up and away. But that was on the hour, right? That was on the hourly time frame. So on the 15-minute time frame, we just moved into the low of the prior up close candle here. And we just tapped that. And then we pulled back from that aggressively. Price has been failing so far. Price has been failing so far. So the idea is it going to continue to fail at this point, right? So price has been moving down, 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 down. We made a rally up into the body of this candle, and we turn over like this right here. We drop down to this down close candle on the 15-second chart. We're still a little bit higher, but we pop up trying to show that we want to go higher. For a new 5-minute candle opens, we pop up. Do we think that we're going to run this high on this wick? How long can I give? How long should I wait? How long can I give to see or say? 15 minutes left in this, I mean 9 minutes left in this 15-minute candle. So that's an extended period of time for this candle to move up like this, right? Hmm. Yeah, I don't think so. I don't like it. I don't like it. I don't like it. I don't like it. And I know it's not a matter of whether or not I like it. It's much more a matter of 1021. We're just looking at this price, and I wouldn't even expect to have range today. I'm not expecting to have range. I'm really more so looking to see where's price closing and where is it going after it closes. And I've noticed for the last few days, certain days when price begins to spool in one particular direction, namely pre-market or the Asian session, we'll see that. We saw that a little bit yesterday when price was just running in one direction, where as soon as it went past the down close candle, it immediately dropped back to it Didn't run back past it, didn't put in 30 wicks past it before it went up, but it just continued in a particular direction, right? Very, very smoothly and efficiently. Today we see that we have a lot of price overlap in this entire range from the beginning of the day. We have been in this sideways motion, right? So we opening price was here. We went down, we went up, we went down, we went up, we went down, we went up, right? So now we just kind of crisscrossed and past the middle of everything. Nice push, nice push, nice push, nice push. hmm Tapped into the low of that 15-minute wick again. I mean, sorry, tapped to the low, the opening price of the prior 15-minute candle one more time, and we kind of just pulled back again. Not much range between down closed candles. Um, be careful of consolidations, right? Be careful of consolidation and brain churn. So we could sit here and churn our brains, right? Churn and churn and churn and churn and churn. And one of the things that we won't notice is we won't notice this as we're watching the price action churn, that it's doing things and it's moving and it's just gradually getting to particular places and particular locations. This is London session high we just touched. This is London session high. Hello, London session. Get it? London session. Hi, London session. Hello. Okay, 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 okay. Yeah, jokes. All right. So this is roughly 87% retracement from this high down to this low. That's kind of I really, really wanted to mark that out as a position and as a place. Moving past this confirms this longer higher range consolidation for me. That we're just going to consolidate back and forth through these ranges for quite some time. On lower time frame, trying to get a buy stop in place as quickly as I could. It's really, really tight. It should be up here, but that's more drawdown than I wanted. I really wanted a super, super tight stop loss. Um, that I would never need. And it is what it is. You see that just stab down below my entry? Let me tell you, that's never a good sign. Never a good sign. The only time I like that is when it just plummets, right? It just when it stabs down to here and then begins to kind of look for like a close down here. That's the only time I like that. Any other time, it's just a retracement back to like the wick of the prior down close candle. And the way it does it with that velocity is one of the signs that says, yeah, no, buddy, you might as well start bringing your stop loss down because it's coming back up. Reduce your risk. It's not gonna. It's going not going your way. Boom, just like that, just like that. So it is. It just that's how it does, and that's just what we saw. It's right down here, taps that level, and then takes off. So does this confirm bullishness for me though? Right? Does that confirm bullishness, or does it just confirm that my stop loss was just too tight anyway? That my stop loss should have been up here. Yeah, I don't know. So we are down 500, I think, on the day, 408, and we're gonna keep on rolling. Okay, so let's take this as what it is. Here in this up close candle at this particular range, dropped down below, took out London session low, turned over, popped up. Now here's the range overall high to low, roughly at 70%. It's extended. Right, 1 minute 59 seconds. Return to this gap up above this high. So 30%, right? Is that 3 out of 2? I mean, is that two? 30%, is that 1 out of 3, right? That's 1 in 3. So my trading accuracy is literally like 30%, 3 in 10. One minute left in the 5 minute candle. We're in the wick of the 15 minute, the highest candle in this range. We're in the tail of it. I wouldn't necessarily want to see us break down from here. What I would normally want to see every time we come into the extremities of a range is just normally a pullback of a slight pullback before we go through. That we get to the end, um, and then before we break through all of that, there's some type of a slight pullback. Mm. In the 5 minute chart, it's been an unbroken move to the upside. And yeah, there's several trades down here to get long that I did not take that I wanted to take. I talked about taking and didn't take, and yep, it doesn't really mean anything because of the way that I'm managing my stop loss placement. That's the more important part when it comes to that. So we had just these well, we have one candle breakdown here on the 1 minute chart. How many candles do I need before I would say, oh wow, I think market is changing direction right here, especially coming into an imbalance like this. That's always struggle for me. The idea that we are faltering right here means that we could consolidate in this gap for 3 years and then move back down. So we came into the lower wick of that 15 minute candle and then we just kind of rolled over. So this is just two down closed candles, right? This next candle's, oh, that's interesting. Gah. That's interesting. We dropped down here and hit this down closed candle, then we popped up. Mm. Down below the closing price of this five of this 1 minute candle. Turned over. Yep. I believe I just took this short right here. Drop it right back into the same level, which is what London session high. Touch right off London session high. London session high again. Oh. To me, it would just be extremely interesting to see us just sail up and down through London session like this. Just sail up and down through London session. We penetrated it all the way through. We dropped out the bottom of it, closed below London session, then popped all the way back up here, hit this area, and now we're doing this. So, what does that mean for your regular average regular Joe trader, me, Grady on the chart? I mean, what does that mean to me? Does that mean anything significant? Or does that mean that we're just going to drop right down here, touch London session, high again, and then wave to it and keep going? All right? Hey, terrible. Terrible. An hour and 16 minutes on the stream. We're back to the low of that up close 15-minute candle. Just touching it again. Just touching it again. We kind of pulled back away from it as I thought we would. When we dropped down here and we hit London session, the London session high, I did not really expect us to be so clean with it. I thought about taking it as an entry, but I didn't expect it to be that clean. Um, I thought it was interesting that we had three down close candles on the 1 minute chart, up close, and then an additional down close candle. I thought that was interesting. Interesting. Did not, I didn't really process what that could possibly be. But that's what happened. Then we popped up here. There's 87%. Again, that's one of the levels where I really like to take my short entries. but especially when it's like up here, 50% between these two levels would be the better area. Let's see if we push through, take the top off of this thing. We did just retest London session high, so that would be my guess is that we're going to move higher from this point. And probably once we take the pre-market high, then oh, we'd have a slight retracement and then really get going. 2 minutes left in the 5 minute candle. So, too slow, too slow, too slow, too slow, too slow, too slow. Too slow, too slow. See how it's doing the flash to the downside? I'm gonna give it a couple of seconds. It's possible that it could hold up for us. I doubt it. I'm gonna take this off. Regular 1 minute retracement. 180, 185. My stop loss is really tight here. I tightened it up too much. But like I said, that's just the regular 1 minute pullback down here, pullback. If this doesn't go down, then we're just gonna have to go ahead and take this $50. I'm on 15-second chart. You can do it. You can do it 15 seconds. Nope, no, don't do that. And everybody's thinking, well, how do you expect to succeed? Sorry, get that off of that close candle. How do you expect to succeed if every time you get into a trade, you just choke the stop loss down so tight? Well, the thing is that trades when trades work, they work just like that. They work extremely precise, where there's not much there's else happening when trades are working properly. When they're really going to go the direction that you think they're going to go. See, this, we just came up above this and we've done this and this and this. Yeah, they really work just like that. Now, can I get this 1 minute candle to continue to up before it turns over, drops down and hits the down close candle? All right. Yep. What kind of, ooh, that's better. That's better. Again, this is what I've been looking at, right? I've been looking at 200, 225 on a regular basis. And I know what that means. I know what that means. That means that's how my day is going to go. That's how my day is going to go. 200, 225, 200, 225. That's how my day is going to go. It makes, but to me, certain numbers are numbers that I see when I'm able to get into a trade. I'll see these numbers on a regular basis. Some days it's 700. Like every trade I take, it goes to a particular level, and I'm sitting there waiting for more, and it get offers that to me multiple times, and then like immediately turns and says, "Yeah, no, 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 no more than this. This is exactly it. 700 or 200, 225." And we just saw that when it dropped here, it went 240. When I got in long here, it went up 240, right? Then it turned over and started coming back. Sounds like it's psychological. Yes, right? It is psychological that I'm looking at these particular numbers and I'm saying, dang, every time I get into a trade, it offers me the exact same number again. Why would it, What does that mean? Hmm. It means that it's a consistent range, right? It's a consistent range. So as I'm trading counter to the market movement and I take my entry, it's a consistent range for the price to drop back away from that level and then move in the other opposite direction. That's so I'll see these numbers consistently. Now, does that mean that I'm supposed to just flip bias? No, because it's not enough. It's not really technical data for me to say, yeah, I saw that number over and over and over again here. Just watching how price has this imbalance. We went up above it, went down below it, turned over on it. Mm, mm. What time is it? 10:42. I wonder how much trouble I get myself in before 11 a.m. Boom, bang, bang, boom, boom, bop, bang, boom. Coming into this little 5-minute exchange here. We have three consecutive up close 15-minute candles. It doesn't really mean much. One thing that we could possibly expect is that the next 15-minute candle would open off the high of this one. That's going to close in a minute and 36 seconds and then drop down maybe 50% of the total overall range. Maybe 30% of the total overall range is probably more like it. So we're probably looking at somewhere around 19,991, right around here, 19,991, that this next candle would open and drop back into this area. There's 1 minute and 15 seconds left, and this 5-minute candle has just come all the way back down to this area and rolled straight over while we were talking about it doing it, right? But that's okay. That's okay, because we have 50 seconds to find out what this market is going to do. Drop down to the down close candle, wick below this level. That's bullish to me. Oh. 29 seconds. 29 seconds. Boom, pop, bing, bam. 8 seconds left in the 15-minute candle. It just turned over slight wick here. New 5-minute candle just opened. So there's a 5-minute gap just below here. I was wondering if we were going to see any movement to the upside first. Any movement to the upside first, I would have sold. Any movement to the downside, I would not buy. Although we did take the low of this prior down close candle out, I would not have bought it because there's still so much space. There's still so much gap left for us to retrace into this level to take both of these lows out in this space down here between here and here. Okay, to return to that sort of a lower time frame scenario, tapped into there just really quickly. And let's just see, is this just one of those times where price just pulls back real quick, then just collapses, or the opposite? Small gap here on the 15-second chart. We close on the bottom, press up to the upside. We're going to risk money here. I did. Is it going to immediately take it from me? Yes, it did. Mm. Four, three, two, one. New candle open. Up, 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 down, down, up, down, down, up, up, down, down, up, up, down, up, up, down, down, up, down. Yeah, I think that's going to be it for the stream for today. Not bad, 276 down. I bought right here and I immediately jumped out for some because I entered on the wrong side. When we having outcomes like that, I want to say that that's not uh that's not the best trading that I've ever done. I may have had a small profit there, but that's not, yeah, I don't like that. I don't like that. I would rather, yeah, I don't know. I don't know what I would rather, but I would rather not depend on coin flips to be profitable. We went up, we turned over, we dropped back in. There's 1 minute left in this 5 minute candle. Sorry, just moved that for no reason. Control Z. Don't like that. I'm just watching this level here on the 15-second chart. What are you about to do? Hmm, What are you about to do? You're gonna go up and up and up all the way through. Turned over. Are you dropping down or are you going up? That's 37 seconds left in this 5 minute candle. Which way are you going? We didn't take out that high, and there's kind of this weird gap scenario going on right here. We're at the high of this up close candle and we're faltering. We didn't just press through. So that's the only reason I'm watching. Time is 59. Macro is beginning in 15 seconds. Boom, 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 boom. New 5 minute candle. Moving down from the up close of this 5 minute candle. In, turned in just a little bit. And I always, until recently, I've never really thought of myself as trying to uh catch the high or trying to catch the low of day. But doing that is what gets most of us in trouble as traders. We see a place like this and we're saying, yep, this might be it. This might be the high. This might be the low. Yep. So it's just that one of those things. Do 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 do. Hi. Sorry, hi. Okay, the macro's just begun. Mm, 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 mm. What time is it? Okay, there's 8 minutes left in the hour. 8 minutes left into this hour. Okay, well, I'm gonna go ahead and sign off here, and I'm gonna ask you guys like and subscribe. I hope you guys enjoyed our day today. Um, we were able to to control the most important factor that we can control, which is we were able to keep the trader limited to narrow windows, looking for specific opportunities at specific times. And thankfully, we did not let the market get away from us to a degree where we wanted to get revenge for missing like this long move to the upside. Like not getting revenge for missing that move is the issue that we were really looking to solve for, this move to the upside. We were here and we were watching this area and we saw all of this. And then we saw us move back up through these ranges and we retested all of these levels. We dropped back in. We went down below a down close candle. We created another longer down close candle. Then as we were moving back past it, we retraced and retested that level again. And, we were like, oh, okay, well, it is what it is. We let the market proceed as it was going to proceed. And then yeah, we were kind of able to survive for the day. So hopefully things turned out better with the rest of the day. Hope it turns out better for the rest of your day. Um, Again, I'm Grady on the charts. This is Trading Entertainment. Hey, I'm gonna hit you with the disclosure agreement, the disclosure documents. Be careful while you're trading. Be responsible for your own trades. Study much, much longer than I've ever studied in order to do this properly. And good and great fortune and luck on the charts. You guys have a good one.